Welcome back, everyone. Michael here with Offshore Citizen. Today I'm going to discuss something which is relevant to a bunch of the people who've been reaching out to me, which is the subject of taxation for traders. So I'm going to loosely use the term day traders. In reality, it doesn't necessarily have to be day traders. These people are doing more like swing trading. Maybe they're holding for a week, etc. But the whole idea is if you're trading stocks, if you're trading Forex, if you're trading crypto, in theory, I guess if you're trading commodities, this is for you. Now, I'm going to specifically hone in a little bit on something to do with Forex because I had a conversation with somebody earlier today who's, a very skilled, very consistent long-term Forex trader. And they were mentioning something that is a bit of a myth, and it has to do with the UK tax treatment of Forex trading. So I'm going to cover that, but I'm going to cover just broadly for anyone who is interested in trading. I'm going to talk to you about, first of all, what is the ways that you can be taxed? And then based on that information, how should you structure yourself in order to pay the lowest legal amount of tax possible? If you haven't been to our channel before, really welcome. And please hit the subscribe button, hit the notification bell. Make sure you don't miss out on any of our future videos. We try to produce great content for you every day. You can go back and check out some of our previous videos. And if you're at all interested in the subjects that we talk about here, we help people to build structures to legally pay the lowest legal amount of tax possible. So first of all, figuring out what is the best solution for you in terms of where to live, where to move if that's necessary, or as well how to set up a corporate structure. And then we help you to actually implement it. So forming companies, opening bank accounts, getting residencies, getting second citizenships, unofficial citizenships, payment processing, etc. If you're interested in any of that kind of stuff, reach out to us. You can book a call with me, clarity.fm/Michael Rosmer. There's a link in the description below. Or you can check out our websites, offshorecitizen.net, offshorecapitalist.com. And unlike other days, you may see I have this Solutions Podcast t-shirt on. That's because I have another thing that I created with a friend. We're just kind of getting started with it, playing around, but we talk about cool subjects. So if you're interested in discussing the problems of the world and possible solutions for it, go and check that out. I hope you enjoy it. Okay, so let me start by using the UK as an example with respect to this Forex trading. So basically what I was told today was this person said, hey, listen, my friends in the UK don't have to pay tax on Forex trading. And I was like, huh? So this is, and they're like, yeah, it's considered gambling and gambling isn't taxable. So this is a bit of a misnomer. That can actually be true. So I am going to tell you about how that could be true and how it's, in a bunch of cases not true. So here's basically the loose discussion that you have to have as a trader. Number one, are you a speculator? Basically gambling, right? Number two, are you an investor, right? Number three, are you somebody who is doing a business or a profession, okay? Those are the three categories you can end up in. And the tax treatment tends to be different, although in some cases the first one doesn't exist. So what they were referring to when they were talking about this is that in UK, if you're doing Forex trading using something called spread betting, then that is considered a bet, as opposed to if you use CFDs. CFDs are considered an asset, so if you trade CFDs, then you're going to be taxable. If you do spread betting, then you're not taxable. And apparently some people file the wrong way for this. So that's one thing, okay? But beyond that, it's not even quite that simple, because if you were doing spread betting as a profession or as a business, then you could still consider it business income. And this becomes relevant because let's say there's a lot of people who reach out to me and they're saying, hey, listen, maybe I should go to Portugal, maybe I should go to UAE, maybe I should go to Cyprus, maybe I should go someplace where I can get favorable capital gains treatment, right? And the question is really, is what you're doing capital gains or is it earning income? Now, on the surface, it's worse to earn income because usually if it's your business or profession, then you're fully taxable on it. It's regular income, right? Whereas if it's considered capital gains, then you often have a favorable tax rate. In some cases, you can have zero tax. It depends on the country, okay? But although that might sound bad to be in this category over here where it's your profession or business, there's actually some ways that can be favorable for a lot of countries, okay? So be aware of that. Okay, well, let's go through this. So usually you are, let's call these speculators, traders, and investors, okay? I'm loosely throwing those terms around, but that's the general idea. If you are an investor, then usually what you're doing is you're buying and holding the asset for a longer period of time, either for capital appreciation or for some sort of output from that asset, whether it's rent or whether it's dividends or whether it's interest, etc. Okay, that's what makes you an investor. In some countries, there's a hard, fast rule that if you hold for a year, it's considered a capital gain, or a long-term capital gain is sometimes how it's defined. And if you hold for less than that, then it's short-term and you're more in the trader category. Okay. All right. Now, why this is important is because in a bunch of countries, if you have an international tax structure, the international tax structure that you go after and sometimes punitively tax passive income, okay? And so capital gains would often fall into that category, right? So for instance, let's say that I'm in Canada. I had somebody, or another example is Sweden. I had somebody reach out to me the other day. They said, hey, listen, I'm from Sweden. I'm interested in putting together this structure for investing, so I want to, form a company abroad, et cetera. Well, it's not that simple, right? Usually, they consider that easily revocatable income, and there's usually CFC rules to counter that out. There's something called a PFIC, Passive Foreign Investment Company, in the US that can be used to deal with that. In the case of Canada, that becomes what's called FAPI income, foreign accrual property income, and that gets taxed differently. So country by country, it varies. But the bottom line is, if it fits into that category, then even if you have an international structure, they're going to tax it punitively. So the bad news is, if it's an international structure, you're taxed punitively. The good news is, in certain countries, that type of income is tax-free. So for instance, places like Malta, places like Cyprus, often like the non-dom programs of different places, et cetera, will give you a favorable tax treatment on capital gains, okay? The flip side, though, is this active income, and that's what a lot of people are dealing with. So a lot of people might say, hey, listen, there's no capital gains in Portugal under the NHR if it's foreign capital gains, not if it's domestic. And so, hey, listen, I can go there and I can do this trading, right? Because that's capital. No, in that case, usually that would be considered your business or profession. And so you need to treat it differently. So how would you treat it in that situation? Well, it turns out this actually could be good if you have enough scale and if you're willing to put the correct, basically the correct structure in place. It would work like this. What I would do is I would form an international company. Okay, the international company would have to be genuinely international. You can go back and look at some of our videos on corporate residency and things like this. But the bottom line is it would have to be genuinely a foreign company, not just formed on paper foreign company. But if it met that standard, then what I could do is I could turn around and I could have that company hire me at arm's length to perform the trading activities. Okay. Now, the income that I earned there at arm's length, which might be through a local company, it's hard to say, would be taxable. Okay, so that portion I'm going to pay tax on. But then the gains from that could be realized as active business income and taxed in the foreign country at its whatever the commensurate rates are. So let's use an example. Let's say that I was setting up a company, so I'm in Canada, and I set up a company in Isle of Man. Okay, so if I'm going to sit there and I'm going to do the trading, there has to be some connection to Canada, right? I have to pay some tax there. So I'm going to sit in Canada, I'm going to do trading, I'm going to have to genuinely have everything that it takes to set up that foreign company and maintain that foreign company as genuinely foreign. But there's one of the services that they can contract out and they could pay me at arm's length to do that service, or me or my Canadian company or whatever. And the active business income, which is generated through those trading activities, could potentially, if it's all structured properly, be tax-free, right? So then a portion of income is tax-free, then you can repatriate it. I've done some videos on that in the past, and I can do that tax-free as basically active business income under the participation exemption, and I can save a whole bunch of tax. So anyway, this is the conclusion for you. In certain situations, if you can do something that's considered gambling, such as in UK, if you can do something like the spread betting thing, and where you can be considered a speculator, not considered a profession, then yes, indeed that could be tax-free, and there's some countries where they have special regimes that allow that to be tax-free. Cool. If you're an investor, then often you can take advantage of long-term capital gains, and or you can relocate to a country that doesn't tax those capital gains. So also good, right? Number 3 is if you're a trader where it's your profession or business, again, sometimes maybe you can take advantage of it, depends on the country, but generally speaking, if you have enough scale, Now you can turn around, you can utilize an international structure where you can go and you can get at least a portion of that money at a much lower tax rate and deal with it accordingly. So that is the deal. If you have any questions, please reach out to me. Again, you can book a call, clarity.fm/Michael Rosmer. You can talk about your specific situation. I'm happy to help you. Hit the subscribe button, hit the notification bell. If you like the video, give it a thumbs up. If you don't, please tell me why in the comments and tell me what other topics you would like to see. And I'm going to look forward to seeing you guys on the next video.